Well, thank you so much for joining us today. Of course, I am with the wonderful Karla. We've been doing a series every month on different types of loans, and it's been so helpful. Karla, I've had buyers say they've watched this, and it's really, really helpful. So hopefully, this can help someone
Awesome.
today. We are going to talk about what? VA loans. So, how are you?
I'm great. It's so good to be back with you, Jennifer, and I'm excited to hear that buyers are getting benefits out of our explanations of the different loan types. There's so many possibilities out there, and it's just not one size fits all. So it's great to be a part of
Well, and I'll say, just like we've talked about in the other series, the first one we talked about was FHA loans and like the benefits to those, then conventional last month, this month's VA. But there's not a lot of education out there. Buyers don't automatically know, the pros and cons to each program. So this is why I feel like it's so helpful. And yeah, you've helped a lot of people. So thank you for doing this. So we're
Awesome.
ready for you.
Perfect. So today we are diving into VA loans, which is the shorthand of Veterans Administration mortgage loans, and they are amazing benefits. So I'd love to just get in and get started, and then if anybody has questions at the end, definitely we'd love to answer any questions that come up.
Perfect.
So today, these are the things we're going to cover. Just basically, what is a VA mortgage, who might be eligible, and what benefits they have. Like, why would you bother pursuing a VA mortgage rather than maybe a conventional or other choices that you have? What kinds of properties can a VA mortgage purchase? Um, and then also take a look as well for current homeowners that might want to look at refinancing, um, what benefits they have to refinancing with a VA mortgage, and just kind of address some common myths and facts, and then where do we go from here?
Perfect.
Awesome. So here's the basics in a nutshell, and we're going to break all of these things down. But a VA mortgage, kind of just a breakdown of the definition. It is a home loan that's guaranteed by the U.S. Department of Veterans Affairs. And we'll break down also like what does that mean to be guaranteed? Um, it's a really great strength to this loan type. So we'll definitely get into that. Um, and it basic eligibility is for veterans, active duty service members of all branches of military service, and some surviving spouses. Um, and eligibility is based on VAs determining and entitlement. So we'll dive into that as well. How do you know, maybe you are a veteran or active duty or perhaps a surviving spouse. Like, how do you know if you can get a VA mortgage? So we'll dive into that. Um, and the fact that it's available for purchases and again for refinances. And a VA mortgage is not a government mortgage. It is not money lent by the government or the Department of Veterans Affairs. It is guaranteed by them. So these mortgages are offered by private lenders. So this is not a mortgage that a person would need to go to the VA to get. They can get these through private lenders, mortgage companies across the nation, and they are not directly funded by the VA. So those are some of the basics about what a VA mortgage is.
Well, and I'm glad you brought that up because I really do think, and correct me if I'm wrong, I think a common misconception is these are from the VA, they are government loans. I
Right.
think that the public really does think that, right?
Yeah, I think you're right. And sometimes they're even in the lending world referred to as government loans, but they truly are not. They are funded by private lenders or, national mortgage companies, but they are not actually funded by the VA. So let's kind of step into who may be eligible and how you find out if you're eligible. So, as the name VA mortgage would suggest, veterans of all the armed forces branches may be eligible, and this will be determined by when a service member leaves service, they are given a form called a DD 214 by the military, and that is a separation form which has a lot of the pertinent information about their length of service, their type of service, um, and whether they left honorably, dishonorably, and a lot of details about their service and their leaving of the military. So that is something that we will need as we look into the eligibility. But also, the lender themselves will connect with the Veterans Administration portal, and through that, after we have an application for a mortgage, we will do what we call pull the COE, which just means we go into the VA portal, we request a copy of the certificate of eligibility, and that is the determining paper that is issued by the VA that tells a lender whether a service member or veteran or surviving spouse is eligible to apply for a VA loan. And then also um, whether or what types of like how much entitlement that individual has. So that COE is pretty crucial. It's a good step in the beginning to tell us right off the bat, can we pursue a VA loan or can we not? And if we do, um, can we look at the zero down funding or do we need to do some kind of a down payment? So um, that is a really big initial step.
Okay.
So, an overview of some of the advantages and why I honestly love VA loans. And one thing I meant to mention, Jennifer, in the beginning is that I do kind of have a soft spot in my heart for VA loans because I come from a family where my father and my uncle were veterans. My husband is a veteran, so it's kind of near and dear to my heart. I appreciate, service members, and I'm sure you feel the same as well. And this, I feel that service members have given a lot, and this is just a great benefit coming back to them. And so I love to be able to inform them of what their options are in this. So, some of the key advantages of the VA loan, and we will dive into each of these, but an overview is what the entitlement is. So there's a couple terms you'll hear that are kind of exclusive to VA loans that you might not hear if you're pursuing a conventional loan, an FHA loan. Um, Entitlement, guarantee, certificate of eligibility. These are all kind of exclusive to the VA mortgage realm. So we'll dive into what is the entitlement, what is the VA's guarantee, um, when can you go zero down? That's a big one. Everybody would love to know that. And a lot of VA loans are definitely zero down, which is a huge advantage. Another huge benefit is there is zero monthly mortgage insurance involved
Mm.
in a VA loan, even when a home buyer goes zero down. So that's huge. It's the only loan type among conventional FHA, USDA, VA. VA is the only one that never has any monthly mortgage insurance component. So that's a huge big deal. There are flexible credit guidelines. It's not as narrow as some people might think. So there are some limited closing costs, and there isn't there. This is also the only loan type that can be assumable by another borrower in the future if that borrower meets, you know, guidelines. So we'll jump into that too. So a lot of really exclusive and neat benefits of this loan type. Okay, so first we'll look at the purchase focus, and then a little bit later we'll look at what refinance benefits there could be with a VA loan. So we'll start with entitlement benefit and the VA guarantee. So first of all, what is an entitlement from the VA? The VA entitlement is what your loan benefit is called. So it is not a dollar amount that the VA will give to the veteran. This is the entitlement is broken down on that certificate of eligibility, which is that form, that really important form we were talking about, that in the beginning of the pre-approval process that we will pull from the VA portal for an individual, and it will tell us this service member or veteran has basic entitlement, or this service member veteran has bonus entitlement. So those are kind of weird terms, and just to kind of make it simple, a basic entitlement currently will say $36,000. And you might think, well, that's not enough to buy a loan or, to buy a home. And of course, no, it's not. What that means is that is their full basic entitlement that would the full entitlement would be 36,000. So um the entitlement is how much the guarantee will cover, which we'll get into that in a moment as well. But essentially, it's usually 25% of the purchase price is what the VA is going to give the veteran a benefit for and guarantee. So 36,000 would be 25% of 144,000. And Jennifer, like in our area, we're not even in the most expensive
Mm.
home price area of the country whatsoever, but 144,000 is just really not with today's prices going to
Right.
purchase a lot. So that the VA understands that, and that's why you see that the bonus entitlement will also be addressed on that certificate of eligibility. So, of course, if a veteran is going to buy a home that's over 144,000, which is very likely, then the bonus entitlement will cover 25% of the remainder. Um, and a neat function of a VA entitlement is that it's not just a one-time use. So sometimes people will think only first-time home buyers can use this, or um, that a veteran can only use it once in his lifetime, which is actually not true. There are multiple times that a veteran can reuse this entitlement. So it's really exciting. I put this little chart there at the bottom just to give kind of a basic view of when can a veteran use that entitlement more than once. So say he has bought a home with a VA loan and then paid it off, and then he's ready to buy another home. Can he use the entitlement again? Yes. Or he has still has the remaining home, or I'm sorry, still has the home that is mortgaged with a VA loan, and he has remaining entitlement. So he has not used all of his entitlement. Can he buy another VA mortgaged home? Yes, actually, yes. Um, the VA home loan is paid off and that entitlement is restored, then yes, if that he's can get a one-time restoration. Um, And if you're buying an investment property, nope, that's never going to work with a VA loan or entitlement. So that's one thing to keep in mind. Truly, VA loans focus solely on primary residence. They're never going to work for a vacation home, for an investment property. So they always have to have the intention of being the primary residence and refinancing. yes, you can use entitlement. It doesn't even count as reusing it if you have a VA loan and then you refinance into another VA loan. So it's definitely a benefit that can be used multiple times. So let's look at the guarantee portion. So a benefit, the VA benefit or entitled benefit and the guarantee are kind of two sides to the same coin. So the entitlement is the benefit to the service member. The guarantee is the actual amount that the VA will guarantee to the lender. So that's how that works. It's generally 25%. So if, just easy math, if there was a $200,000 home purchased, um, then 25% of that would be $50,000. The private lender that is covering the mortgage or supplying the mortgage for that loan, he can offer the low or no down payment, lower interest rates, and no monthly mortgage insurance because there's so much less risk
Mm.
to that lender with that loan. So in the unfortunate circumstance, if a VA loan were foreclosed on for some reason, then 25% of that purchase price is guaranteed to the lender in that case. So it really reduces the lender's risk, which really increases the veteran's benefits in that loan. Okay, so let's take a look at when can you use the 100% financing, um, or also called no money down, um, and when would a down payment be required? So there would be no down payment required in this scenario, that when the purchase price of the home is equal to or less than the appraisal value, um, when the borrower is an eligible veteran with entitlement, and if that borrower has a co-borrower, that co-borrower can be a spouse or it can be another eligible veteran. Then also, um, the sufficient required reserves are met. So we'll dive into this a little bit more as well, but the VA looks at the whole picture of the veteran's financial situation on a monthly basis to make sure that he or she won't have a larger mortgage payment than what would be sustainable in their monthly income. So they want that, they will always want them to have what the VA refers to as reserves. So just what it sounds like. There's a certain calculation they use for what's left over at the end of the month. If we know what the income is monthly, we know what the mortgage payment will be monthly and other monthly debts, what's left over. So those are called reserves in this case. And we always want to make sure there are sufficient reserves. So if all those requirements are met, zero down loan. Now, just a little addition here to that, if you don't mind, maybe flipping back to that last one for
Sure.
just a moment.
Let me try to
Thanks.
figure it out. There you go.
Thank you. So even if you are eligible for a zero down mortgage, you don't have to not put anything down. For example, what my husband is a veteran. When we bought our current home, we had sold a prior home and we took a lot of that equity and put it down on our current home. So we were eligible to put zero down, we just chose not to. So that is always an option. They're not required to not have it, not put money down. So a down payment would be required when these items would apply. If if the buyer is purchasing a home for a higher purchase price than what it appraises for, then of
Mm.
course that veteran will have to pay the difference between those values. And or if the borrower is not eligible for the full VA entitlement, or if there's a co-borrower that is either not a spouse and not an eligible veteran, maybe a friend. I've had a situation like this before where two friends decided to pursue looking at a VA loan, and we checked, and they would have a down payment requirement because only one was the eligible veteran, one was not, and that other individual is also not a spouse. So that's something that we can always break down on an individual level and see per person's situation if there could be a down payment required. So those are the basics of when a zero down loan or a down payment might be required. So no monthly mortgage insurance. I love this. We touched on it a little bit earlier, but I always just have to celebrate when I think about this because it's huge. And I'm sure you see, Jennifer, because you deal with all the different loan types with your buyers. Um, and the breakdown, they could be saving, I don't want to actually say a dollar amount because I don't want to suggest a commitment to that dollar amount, but um, it could be a sizable chunk of their monthly payment can be mortgage insurance. So the absence of that just gives the ability for that loan amount to be less on a monthly basis, which is wonderful. So um, the VA funding fee may apply, which is a one-time upfront fee. It's not mortgage insurance. It has a different purpose. It can be financed into the loan, and we will touch on that in another slide a little more.
Okay.
So another advantage of a VA purchase is the great interest rates. In comparison with conventional loans, VA loans often come in lower in interest rate, and they are quite comparable with FHA loans as well. So they definitely have the ability to have one of the lower interest rates of loan choices out there. And again, because of being backed by that VA guarantee reduces the lender's risk, and so the lender has the ability to offer lower rates. And of course, the rates do vary, you know, based on what the market conditions are and the borrower's profile itself. So that's definitely an individual thing. We can always explore all the options on rates. So, what does the VA look at as far as credit? This is another advantage of a VA loan. Some loan types are a little bit more strict on credit requirements. VA actually has some flexibility in there. And sometimes I see even with credit scores that maybe are not, you know, in the 700s and up, and maybe they're lower than that. I actually have still seen some very good interest rates on some of my borrowers. So there's definitely a flexibility there. Um, so they look at the overall credit profile, not just the score. And as we've talked about on some of our other loans, our webinars for conventional and FHA loans, DTI is a factor in all loans, which is the debt to income ratio, meaning how much does this borrower have a month of income versus how much debt, monthly other liabilities, including and also including mortgage payment, do they have? So that's created into a ratio, which each loan type has a maximum ratio that we need to keep that under just for that borrower's well-being so that they don't have more payment than what is really comfortable in their budget. The VA looks at residual income also. So
Mm.
this is a factor. They don't exclusively look at debt to income ratio. They can be flexible on that because if the borrower has good residual income after it's all calculated out on a monthly basis, then that debt to income ratio can actually go up a little higher for that borrower. Um, so there's just a good flexibility there. But the reason they do that is they want it to remain affordable, and they want each person that does use a VA loan to not be strapped, by
Mhm.
a mortgage payment, but that they'll have that extra money because, of course, as a homeowner, there's always things that come up that need to be fixed, so or addressed. So there needs to be those reserves, and the VA is truly looking out for their home buyers by addressing that as well, not just the debt to income ratio. And it does the factors in that calculation do change based on a few things. Where you live in the country has an impact. Like we were talking about, Jennifer, some areas of the country have a lot higher home prices and cost of living
Mhm.
than others. So that matters, what geographic region, how big the family is. And because, of course, the bigger the family, then the more monthly expenses a person may have, and other monthly obligations, say a credit card or a um, car payment, something along those lines, are all considered in there. Um, so this just definitely gives a safety net to the veteran borrower and also actually offers a little bit more flexibility for the lenders to fit in a good purchase price for that borrower. So the appraisal is definitely a protection as well to the borrower and to the lender. So the VA appraisal has two purposes mainly. One, it is to assure that the property is worth at least as much as what the veteran is purchasing it for. But two, to make sure that the house is safe, sound, and sanitary. So the goal is, of course, to get veterans into homes, but not just any home, but a home that is going to be like um, last a reasonable period of time, that doesn't have any safety hazards like peeling lead paint or mold or water leaks or a cracked foundation that's not addressed. So all of those things will definitely be looked at in the appraisal just to make sure that it is a good habitation for the buyer. And one thing that a VA appraisal also will often have in tandem that is kind of exclusive to VA loan type is a pest inspection. You've probably run into those before. Sometimes it's referred to as the wood destroying insect inspection, but
Mhm.
basically to make sure that there's no carpenter bees or termites or anything like that that could be making the house less stable. So
Mhm.
interestingly, that's not a national requirement. It really depends on the
Oh,
state. Yeah, so a lot,
interesting.
I would say the majority of states do require it just because those pests may be living in that environment on a normal basis. But some of the northern states in the continental US don't require it. And then there are some states that really just go county by county, whether it's required. So, yeah, just an interesting little fact about that.
That is
In
interesting
Indiana, it is
because we just
required.
we just had yeah, wood destroying insects or termite inspection here for the buyer that you're helping. And I guess those people are lucky. Maybe they don't have a lot of insects since it stays cold. Maybe I should move up there. I'm thinking about it.
Yeah, I think up north, but they do have a little less of that.
Yeah. Oh my goodness. Okay, yeah. Let me think about that.
So, what can you do with a VA mortgage? What can you buy with it? Absolutely a single family home. You can also buy a townhome, a condo, if the VA can approve it. And condos have a little bit different requirements with a home mortgage. So there's just some factors that have to be looked into as far as homeowners association, how many units in that condominium are rented versus owned. Is it um, increasing in value or maybe decreasing in value? All those things are checked on just again to make sure that the veteran doesn't buy something that would decrease in value instead of increase,
Mhm.
if at all possible. And also a 2 to 4 unit property. So this is a neat aspect. You'll see down here in the bottom right corner is kind of just a yellow and brick looking building there. It's actually a triplex that
Mm.
I was able to help a veteran fund a couple of years ago up in Hamilton County, just on the north side of Indianapolis. And her intent was to live in one unit and rent the others. So this is absolutely doable with a VA mortgage as long as the borrower lives in one unit, makes that his or her primary residence. That is the um, non-negotiable factor. It always has to be the purpose of the primary residence. So up to 75% of rent may count toward qualifying income too, which is great because if that veteran has a limited income but would like to buy bigger, like a tri-unit like this, then the rents of the other 2 units can actually count toward his or her qualifying income for that purchase. So a lot of neat opportunity there.
Yeah, that's
And
actually really smart because, if you could get the other two units or even a quadplex or whatever to pay your mortgage, go ahead, right?
yeah, absolutely. And you can see there above that is the picture of one that we're currently working on for one of our wonderful veterans. So
Yes.
single family all the way up to 4 unit. And now let's take a look at refinance. There's so many benefits to initially purchasing with a VA loan. So let's just take a look and see why you might want to do a refinance with a VA loan. So first of all, there's 2 different programs to refinance with a VA loan. One is the VA EARL interest rate reduction refinance, kind of a little tongue twister there, also known as Streamline refinance.
Oh.
And the second is a VA cash out refinance. So we'll look at both of those here. Okay, the EARL or the Streamline refinance. This is a neat loan program. I like the word streamline because it really does streamline the process. So in this loan or refinance process, typically there's no appraisal required. So even if the borrower bought the home 3 or 4 or 5 years ago, obviously property values can change quite a bit in that time. But most of the time, an appraisal will not be required, which obviously keeps the closing costs a little bit lower when no appraisal is needed. And also a neat aspect that makes this a little quicker and easier on the homeowner doing the refinance is that we really don't need income documentation or employment documentation, which seems kind of mind-blowing when you're talking about a mortgage, but
Oh.
this would work for a homeowner that already has a VA loan and is just refinancing into another VA loan. So it can be with a different lender. That's totally fine. Um, but usually we don't need the income or employment documentation. So it just makes it so much easier and quicker process. There can be a VA funding fee of 0.5%. Um, If the veteran is exempt from funding fees, then there is no funding fee. And we will touch on funding fees a little bit further on as well. Um, closing costs can be rolled in. So if there's room in the equity of the property already, and the closing costs can fit into that, then really that veteran could close on their refinance without any money out of
Hmm.
pocket. And that's definitely a case by case basis. Sometimes there's just not enough room to roll those in, and so sometimes there can be closing costs that need to be paid at the time. But it is nice to have that option if the room is there. On this kind of refinance, there would be no cash out allowed because the whole goal of this refinance would be to lower your either lower your monthly payment or to lower your term. So a
Hmm.
term meaning maybe a person purchased on a VA loan with a 30-year loan, and maybe they want to refinance into a 20-year loan or a 15-year loan and just get that done quicker. So in that case, it either needs to shorten the term or lower the monthly interest so that the monthly payment is lower. So in one way or other benefit that veteran. There is a 36-month cost recoup test that the VA has. So they make sure that the veteran won't be charged high closing costs for this. So essentially, the 36-month test means that the benefit for the borrower needs to be recouped within 36 months in comparison with the closing costs. So that's a good test. Just, it's kind of just to make sure that nobody charges them too much. Um, and it is definitely the quickest and easiest of the two different VA loan refinance options. So that is the VA Earl Streamline. And then we have what's called the VA cash out refinance. It can also just be referred to as a VA regular refinance.
Hmm.
Cash out, the borrower does not actually literally have to get cash out, but it would be called this if a person maybe has a home under a different kind of mortgage, say FHA or a conventional mortgage, but now they qualify for a VA loan, so they'd like to refinance it into a VA loan. So this can really be a savings because if maybe they have an FHA loan that has monthly mortgage insurance, and now they can refinance it into a VA loan with no monthly mortgage insurance, that could be a savings to them. There is a higher funding fee for the VA cash out refinance, could be up to 3.3%. But again, that is rolled into the loan and not anything due at the time. Um, the 36-month recoup rule really does not
Oh,
apply
sorry,
because, oh, you're fine,
sorry, sorry.
because again, that borrower may choose if they have equity in their home, they might choose to just pull cash out in that refinance and maybe do some updates, remodeling, or something along those lines. So, and those will take a little bit longer, about like a regular purchase, about 30 days normally to close. And it's what we call a full documentation and full underwriting
Mm.
um, refinance. So very much like a purchase.
Oops, I think I went back. Sorry, I'm having troubles as you see. Is this the right one?
I think
Oop,
we might have
sorry.
skipped one.
Hold on, let's go back. Okay, here we go.
I think, okay, let's go one more.
Yep, sorry, I'm just having some trouble with my screen. Darn it. Oh,
Here we go.
oh my goodness, my
Okay,
screen was
perfect.
frozen. Sorry.
And again, we touched on this with the purchase, but I can't neglect to just mention that there's no mortgage insurance on a VA refinance, whether you're coming from a VA to a VA loan or from maybe a conventional to a VA, FHA to a VA, just no mortgage insurance, which is just a big money saver. So I love that. Okay, so this is another unique aspect of VA loans. They can be assumable. They are the only loan type that mortgage type that can be assumable. So, VA loans can be assumed by a qualified buyer. So a qualified buyer would need to be somebody that, goes through an application and pre-approval process so that they are shown to have the credit and the income needed. They can either be a veteran or a service member or even a civilian, which is pretty amazing. So the benefit of this could be, if you think back to some of the interest rates that we were seeing back in 2020 through maybe 2022, the super low rates, and say if a veteran purchased at that time and has a rate that is quite a bit lower than today's market rates, this could be what makes it really attractive if that service member, decides to sell the home and will allow an assumption in the sale, then that could be a really big attraction for buyers because if they were able to assume a loan that maybe has a whole percentage or two whole percentage points lower of interest rate than what might be currently available in the market, that could be a big benefit to them. So it can really make it attractive to buyers. Um, One thing to consider is that when a person assumes a VA loan, they do have to pay the difference between the purchase price and the remaining loan balance. So that would be the seller's equity. Just like in a regular sale, the seller should always walk away with his or her equity in the home. So, and of course, lender approval is required and VA approval is required for this as well. So one thing to consider if a VA, if a veteran has a VA loan currently and he's considering allowing someone else to assume that loan, it depends on what he wants to do in the future. If he wants to use his entitlement again to purchase another home through a VA loan, he would want his entitlement restored. So if it is assumed by another veteran, a qualified veteran buyer, um, then the current owner's entitlement is restored and he can turn around and go buy another home with a VA loan. If it's assumed by a civilian buyer, then the seller's VA entitlement remains tied to that loan. So in that case, the seller would not be able to then go and purchase another VA loan unless he has remaining entitlement available. So that's just a consideration, but it is a neat aspect to VA loans and can really be a benefit when it's on the market, and it makes a big difference to some of the buyers. Okay, so myths and facts, these are always fun. The myth is that VA loans take a long time to close. No, they really don't. They're the same as other loan types. So really, you're just looking at generally about a 30-day close on a VA loan, just like other loan types. Another myth is that VA loans are only for your first purchase. You can only use them once, but we touched on that already. Really, they are for first-time buyers. They're for seasoned buyers. Second, third, fourth, it can definitely be done. VA loan can be used multiple times as long as that entitlement is available. That's the key. So VA loans, another myth is that they only consider debt to income ratios like the other loan types. And the fact is they don't. The debt to income ratio is a little bit more flexible because they really look more at the residual income. So there can be a nice flexibility in there for the VA buyer. And I love this one, VA loans. The myth could be VA loans only purchase existing homes. But no, you can actually build a brand new construction, either a custom built home or have a track or spec built home built for you using a VA loan. So it's pretty amazing.
Yeah, I did have someone I know build a custom home, and yeah, they used VA and it worked out great.
Awesome. Yeah. Yeah. That's definitely the only loan type you're going to see some of those big benefits on when you do the
Yeah.
from the ground up construction. So it's great. Okay, let's talk about the VA funding fee. This is something that is exclusive to VA loans. And this is a one-time fee that the goal of it is to help support and continue the whole VA mortgage program.
Mm.
Um, it is a one-time upfront fee that either the borrower can pay when they close on the mortgage, but absolutely don't have to. They can roll it into the loan. So, interestingly enough, if if the veteran buyer goes with a zero down loan, that would be considered generally 100% loan to value loan. However, say this borrower has a 1% funding fee that he would have to pay. He can choose to roll that into the loan, aka finance that. So really he could end up with 101% loan to value with that VA loan. It is pretty amazing. So the funding fee in a nutshell can be anywhere from zero up to 3.3% currently. And it really depends on what the buyer is doing. So, how many times they've used the VA home loan program will change that amount. Whether it's a purchase or a refinance can change that amount, and which type of refinance changes that amount. But also, if the veteran has a service member's VA disability rating, which is a letter issued by the VA for that veteran, and it could be a rating, if the VA has given that service member or veteran a disability rating, it could be anywhere from 0 to 100%. So depending on what that rating is, that veteran may be exempt from the funding fee, um, which is pretty exciting. I never want, to see any veteran have a disability because of their service. However, this is one type of benefit that the VA makes available for that veteran going forward. So he could possibly not have any funding fee at all.
I love that.
Mhm. And there's just the next steps. How do you get started in this? How do you find out if you qualify, if you're eligible? Um, Contact me. Let's talk about it. I would love to go through this with you. Let's talk about, whether you want to purchase or you just maybe already a homeowner, want to look at refinancing. What are the benefits there? Um, I can help you confirm your certificate of eligibility, and we can see, what your entitlement amount is. And then, of course, we kind of proceed like normal and get the mortgage application done, documentation in, and then just explore with Jennifer and see like what houses do you want to buy? Like we've been through this recently, so it's
Yeah.
pretty exciting.
Oh my goodness, I love it. Oh, there's your information at the bottom
Yeah.
left. And you're so helpful, and buyers love working with you. I was wondering just a few things if you don't mind. So, what our first session that we had was on FHA loans. And
Mhm.
so remember, the FHA has a FHA 203K rehab loan. My
They
question is,
do.
does VA have a rehab type of loan or no?
That's an excellent question. And to my knowledge, currently they don't.
I didn't think so, but It sounds good if FHA has one. I thought so. If a
But
veteran
you're right,
wanted
the
to
loans
buy,
do as well.
yeah, if they wanted to buy a home that did need some rehab, they'd probably have to, because one thing about it, they'd probably have to have funds on, you know, set aside for that rehab, right?
Yes, and what also with the VA appraisal, since they do look for things like peeling
Mm.
paint, rotted wood, anything that might be a health or safety hazard, that normally those will need to be addressed before closing. So if those things are found, um, of course, they could maybe become a point of negotiation. Like I'm sure you've dealt with that, Jennifer, that if a default or defect is found in the home, then that might be a good opportunity to go back to negotiate, possibly
Hmm.
either having the seller fix it ahead of time, or if they're not willing, um, to lower the purchase price. But honestly, in the case of VA loans, there are some things that would definitely have to be addressed before the underwriter would sign off on that closing. So, and
Okay.
really for the goal of protecting the veteran from an unsanitary or unsafe environment and protecting them from another outlay of cash that they may not be able to afford.
Yeah, that makes sense. I figured I'd ask because I hadn't heard of one, but I thought, well, maybe it does exist out there.
Yeah,
Um,
not yet.
so, oh, not yet, right? So, as I'm listening to all this, I talk to buyers and sellers all the time, but when I talk to buyers, when they come to you and say they want to get a VA loan, how many of these buyers, and I feel like I know your answer, how many of these buyers actually know the benefits that you talked about, know everything there is to know about these VA loans? Do they usually come in with just kind of like assumptions, or do they really know like there's no PMI, there's no this and that? What happens when they
I,
come talk to you?
I think that I would say probably most of them are not aware of all the benefits. So it is always fun to be able to share those with them because they have served, and I love to see them get the benefits that really are available to them. So, and anytime I can save one of my home buyers money and get them the best loan program for them, it just that makes me happy. That's why I do what I do. I want to get them, not only the home they want, but also like
Right.
the financing that really works for them that's gonna not be too expensive. So I love to save them money. I would say that there have been a few home buyers that have come to me that are pretty familiar with it, but it's because they've had one in the past. So that is an advantage. But one thing we didn't talk about, and I forgot to put this in the slides, is that one thing to keep in mind as a realtor too with a VA loan is that sellers can contribute up to 4% of the purchase price
Mm.
toward closing costs and or buying the rate down lower. So either one would be a great advantage to a veteran or service member home buyer. So 4% is what they don't have to, but they are allowed to contribute that. So that can help.
Well, I love that because here in our area, homes are starting to sit a little longer. And of course, if I have a buyer, I'm always asking for money toward closing costs. So
Hmm.
yeah, each loan program has a different percentage that you can ask for. So that's really good to know. And a lot of times the sellers are agreeing right now because, and we're in Indiana. Obviously, it's different in other places, but a lot of times sellers are agreeing with, seller concessions and paying a percentage of closing costs. So I
Yeah.
think that's really good to know. 4% is a lot.
Yeah.
Yeah. So,
I'm
and,
seeing
and
that a lot as well too.
yeah, yeah.
Yeah.
This is why I think these are so important because the average person doesn't know these things about loans. I mean, they're not sitting there studying these things like you are working every single
No.
day with loans. And so,
Mhm.
you know, people just hear what their family and friends say and they kind of take that as the
Sure.
gospel. So I think that's why
Yeah.
this is so important. You know, the differences between the FHA, the conventional. We're going to talk sometime about USDA. And
Hmm.
so I just think this is so important. And of course, we're going to post this for everyone to watch who didn't get on, but I just going to see if anyone has any questions at all. Let's see. Nope, we don't have any questions. But I am so thankful you did this. It's so informative. And, you know, there's so many veterans out there. And I know for a fact that they don't know all the benefits. You know, it's not like they have a class they go to when they're, you know,
Mhm.
serving in the military, or maybe there is, but I truly don't think there is because
I don't think
heard
so.
I've heard so
Hmm.
many things that are kind of incorrect about what they think about VA loans. The number one thing, and you mentioned it, that I've heard that they can't use it again.
Hmm.
So
But they
yeah, we've
definitely
got,
can. Yeah. And even in the case of the triplex that we mentioned earlier, the home buyer, the veteran that purchased the triplex in one county, then got a job in about another over 100 miles away after that purchase. So then she really did need to look for a new home in the new location with the new job. 100 plus miles is not really a reasonable commute. So, and the VA can, see the validity of that. So in that case, she did not have to sell the triplex. In that case, she was able to retain the triplex, and she did purchase another home in the new community, in the new city that she moved to for her new job. So,
wow,
yep, just an individual, like we just can look at all those things on a case by case, but there's just so much flexibility there, and it's a super strong loan program. So, just really looks out for the protection of the veteran or the service member, which I really love that. So the first time that my husband and I bought a house, we used a VA loan. And honestly, like you said, we really didn't know what was going on. We just handed over documents that were requested. We didn't know anything about it. So that's part of why I do what I do, because I think that it's just so much better to walk through the process with the knowledge that you need to make the choices that are best for you. So I'm happy to do
I
that for
love it.
people.
I love it so much. Thank you so much for doing this
Yeah,
again. I
you're
really appreciate it.
welcome.
And anyone who's watching this, there's two other seminars we have. Again, one on FHA loans, which is really helpful, and conventional. And I think anyone who goes back and watches those will be very surprised on some of the benefits and different types of conventional and FHA. So thank you so much again, Carla. I
You're
really appreciate
welcome.
it.
Thanks, Jennifer.
Have a great day.
You too. Bye.